So what we want to do tonight is finish up the high-level discussion of life insurance products. We talked life insurance, and then we did annuities. The next one's disability. The one we don't have in this list is health insurance. We're going to spend a lot of time talking about health insurance later, so we'll get into that. But disability insurance, it's similar to life insurance in that something happens to you that means you can't work. Now, death, obviously, if you die, you can't work. But if you become disabled and can't work, then you need something that's going to step in and make up for that lost income. So it's another human capital type of product. That's what this is. And with disability, unlike life insurance, disability is a temporary situation. So it's a temporary situation. You know, death is a lot longer term. It's a temporary situation, and you can have more than one claim in your life. So, and even if you don't have dependents, you will still need disability insurance, unless you self-insure. So when I was at UTSA, we had paid time off, we had short-term disability, we had long-term disability. So you started with your paid time off, which isn't what the product we're selling here. And then you do your short-term and long-term disability. Insurance industry does sell that to corporations, but you can also buy your own. Y'all know what's the most famous disability insurance company out there? Anybody know? They have a really famous commercial.
Aflac.
Aflac, yeah. How many of y'all knew watching an Aflac commercial they were selling disability insurance? I think that's been one of the biggest complaints about the Aflac duck is no one knew what they were actually selling. So that's one of the bigger players in the industry, if not the biggest player. Another difference with disability insurance is you may actually have higher expenses when you become disabled because you have some special medical needs. Now, the question is going to be how much is that those higher expenses are covered by health insurance. So there can be some overlap between these products. So disability is really covering your lost income. Health insurance is covering your higher expenses, but you could have other higher expenses that your disability doesn't cover because it's just going to give you maybe 70% of your salary. So if your expenses go up, health insurance may cover some of it, but if you're so disabled, you have to hire someone to come in and take care of your house. Those kind of expenses, you got to be careful. So you have to think through simulations or scenarios here of what you would need. So even if you don't have dependents, you need this coverage because you're losing your income. And there's actually a higher probability of disability where you're out of work for a few months than there is for premature death for most people. Now, does that mean you need to go out and buy disability insurance? Well, most of you will get this as part of your employment package. So it's just covered. It's just part of it. Social Security and workers' comp are also part of it. This is one of those products that I really hate. And we'll talk about this. We have the same issue with healthcare, is who covers your bills depending on how you're injured. So if your disability happens because you got injured playing football on the weekend and you really got injured bad so you can't work for 6 months, then your disability covers that. If your injury happened because you were on the job and got injured on the job, then workers' comp covers that. So it's one of those products where you have all these different providers providing you, and they're going to ask you, how did you get injured? Your life insurance doesn't do that. You don't have life insurance as well. We'll pay you unless you die at work. If you die at work, we don't cover that. No, your life insurance covers you no matter where you die. But disability is going to ask the question of how did you get injured? If you get injured here, then this covers you. If you get injured here, then this covers you. It's somewhat of a frustration. We are not going to cover workers' comp in this class because workers' comp is sold by the property and casualty industry. So we're covering disability insurance for any disabilities other than the disability that happens on the job, all right? So it's an interesting kind of, the industry's a little broken up that way. When I was at UTSA, right after I started, UTSA started selling disability insurance. And one thing you'll notice, and we'll talk a bit about this, it was really obvious when they offered this product, they had to hire a lot of people. It's an extremely employee heavy product, because when you're disabled, you don't just call in and say, hey, I was disabled, and say, okay, here's your check. It's not like with life insurance. You say, okay, the person died, and they say, okay, well, send us the death certificate, and they send you a check. For disability, you got to know, how did you get disabled? How disabled are you? And then you got to worry about fraud. You got to check in with them every once in a while, because you don't know how long they're going to be disabled. You might pay for their rehabilitation services. You then want to make sure they're actually showing up. There's a lot of fraud in this industry, so it's very intense. And USAA ran out of space, so they had to move all the disability employees up into my area. And my cubicle was right next to those people. And I tell you, that was the most interesting work life I've ever had. The lady right across from me, my word, I can tell you for a fact, she hated her job. She was on the phone constantly. She was real nice and congenial, was a real friendly lady on the phone. And as soon as she hung up, my word, the expletives, she was, boy, it's an intense. Disability insurance is a very difficult product. And that may be why a firm like Aflac, they specialize in a business that is extremely difficult. And that may be why they're so good at it. They really focus on this one product that's already really difficult. So very difficult product. Workers' comp is a similar type of product, very people intensive, very difficult product. So I don't know if USAA still does disability, because it was so intense. It was such a difficult product. So it really stands out as a very different type of product. Health insurance is similar as well. There's a lot more work to do, because you get multiple claims. There's an ongoing checking that you have to do. With life insurance, you got to figure out if they died or not. Annuities, you just got to figure out if they're still alive. But other than that, you just cut the check and you don't worry about it. All right, so those are the main products. Life insurance for premature death, annuities if you live too long, disability if you get injured while you're working, and then healthcare to cover your injuries, your medical bills. Real quick on this, I used to spend a lot more time on this, but I just want to go quickly. Some people get confused on insurance and why it works. And some people say it works because of risk pooling. So what you're doing is you're spreading your risk over a lot of people. And by doing that, if you insure 1 million lives instead of 1,000 lives, you have less risk because you're spreading it over more people. And that's not the way insurance works. It's not the diversification you think about on the investment side. I used to do a math problem where I would show that it's actually more risky to insure 1 million people than it is to insure one person. But I'm not going to do that. But it has to do with the distribution. If you have 1 million people, if your death rate is off by 0.4%, 0.5%, that can add up to millions of dollars. If you're only insuring one person, your claims are either zero or whatever the policy was. It's pretty easy to predict. And so as you insure more and more people, your risk actually increases, because that distribution, while the one or two standard deviations may be coming in as you insure more people, that dollar amount is growing very quickly, because we're paying people $1 million if they die, or $500,000 if they die. So insurance is not low risk because you insure more people. It's low risk because every time you charge a premium, you intentionally overcharge. So maybe you should charge $100 premium, but you add a cushion of $10 or $15. That's what works for insurance. That's why bigger companies are safer than smaller companies, because every time they insure a person, they get an extra $10, $15 of cushion that covers that risk, and that grows exponentially as you add more and more insureds. That's called risk. That's called pooling of resources. So it used to be regulators bought into the risk pooling. So they say, a company insuring 1 million lives is not as risky as a company insuring 1,000 lives. And they went with that. And what happened was these companies with insuring millions of lives did not have enough net worth, because the regulators were thinking about the risk incorrectly. And so they've had to change their models. But I won't show you the math. It's kind of overkill for the class. So just trust me. Prudential is less risky than, say, there's a small life insurer here in town, but Prudential is less risky because they're charging a little extra cushion for each policyholder, and that adds up to a pretty good cushion in their net worth that really protects them. So what's the difference between insurance and gambling? So both insurance and gambling, you pay a little amount of money, and every once in a while you earn a lot of money. So it looks like this very skewed distribution. Most of the time you lose money, but every once in a while you make a lot of money. So that works for both of them. They're both zero-sum games. So one person wins by the other one losing. You can't have both win. So if you die, your beneficiaries win and the life insurance company loses. If you don't die, the life insurance company wins and you lose. So it's a zero-sum game. For every winner, there must be a loser. Both do not make sense in the normal rational economics. And that's because what you're paying out for either for gambling or for life insurance is more than your expected value back. Anytime you buy insurance, you're paying more than what you're expecting to get back. And that's just the nature of the beast, because the insurance company charges for their expenses, charges for their profit, and they charge that little extra amount for a cushion. So it has a net present value. It's always negative for insurance. The net present value is always negative for gambling, the expected net present value. Occasionally you win, but on average, you're going to lose. So is insurance gambling? And I'm going to argue that insurance is different than gambling, in that gambling is something you do where you create a risk. You go to Vegas and now you're risking losing money. Insurance is addressing an existing risk of you dying prematurely. So it's addressing an existing risk. So essentially what you're doing is you have a risk that if it happens, it destroys everything. And you're willing to pay more than the expected value of that risk to eliminate that tail event. With gambling, you're spending all this money hoping for the tail events. So it's a very different. Life insurance, the tail event is what you're trying to avoid. With gambling, the tail event is what you're trying to create. Now, I've never gambled. I've always been nervous about it because you hear about gambling addictions. So I don't want to go to Vegas and do one slot machine and then 20 hours later, I'm still sitting there. Who knows who's got the gambling gene. So I don't know what that's like. Plus, I'm a cheapskate, so I probably wouldn't do that. But I do buy life insurance, or encourage people to buy life insurance. I haven't had life insurance in quite some time. I'm essentially self-insuring. I think life insurance makes a lot of sense. I think all of you should probably have life insurance once you get married, before you get married, or have kids. You can have a debate at that point. But I do think it's very valuable. And while I would not recommend any of you go gambling. So I think life insurance makes a lot of sense. I don't think gambling makes a lot of sense. To me, gambling is just a recreational sport that if you want to throw some money away, then go for it. So insurance benefits a society because it takes this tail risk. And it's this tail risk that if it happens, it causes so much problem that without insurance, people have to save an enormous amount of money. We talked about that a little bit with China. With China not having enough insurance, whether it's property insurance or health insurance or life insurance. So people have these huge risks. If these things happen, it's going to cause devastation to their families. And so the savings rate in China is 25% or higher, whereas they had good insurance, you wouldn't have to save so much. You could pay this small premium and then live your life, and that risk is off the table. So insurance is very, very important to the functioning of economies, because otherwise people have to be cautious and have to put a lot of money away just in case that rare event happens. So it frees up capital. Any questions on that? I mean, if you do gamble, I don't care. It doesn't bother me. And I was in line at a convenience store, a gas station. And the guy in front of me was buying. This guy in front of me his car literally was being held together with duct tape. And I'm not joking. That sounds like an exaggeration, but his car was falling apart and he was buying lottery tickets. And I thought, man, that's a terrible waste of 10, 20 bucks. And then I get up there, he spent over $100 on lottery tickets. And I'm thinking, boy, and I didn't say it to him. I was thinking, man, he doesn't look like someone who can afford $100 on lottery tickets. 500 a day. Is that Anthony? That's on a job, or you see that?
Yeah, I worked at a gas station, and like this guy, he would come in like all the way from like 6 a.m. to 10 p.m. just like throwing money in the machine every day.
You think he was wealthy, or just?
Nah, he like it was like that too. He had like a beat up car, barely start and everything.
Yeah, so it's addictive. So I don't think life insurance is addictive, but gambling definitely is. So so it's fine. But yeah, life insurance I think has a good economic purpose. Makes a lot of sense. Now, some of y'all could argue you don't need insurance, life insurance, if your employer has a good program. Now, USAA, you could get, you got one time your salary automatically. Now, obviously, that's not going to be enough because it only covers 1 year. But they had really subsidized rates to get up to like 4 times your salary. And it was, they subsidized it so that the employer, they give you some incentive to get a little bit more. So you might find through your employer that you're underpaying the premium. You're getting it cheaper than it should be because your employer is kind of sweetening the pot a little bit. So you might look into it, but you're getting one time. So don't forget about that. When you go out and talk to your insurance agent and they tell you need $500,000 of insurance, well, if your employer is providing you $100,000 for free, then subtract that out and count that as part of it. Just be aware if you lose your job or something like that, that insurance can go with you, but it's usually pretty expensive to take it with you. So, always don't buy insurance, don't rely on insurance, forget about it and assume you have it. Always be rechecking every few years and make sure you're still covered. But your employer will usually provide you some life insurance for free. All right, the last thing on the economics of insurance is, so before we talked about when you should buy insurance. It's when you have low frequency events and they're high severity. So here we do the flip side of this. When can an insurance company provide insurance? What type of risk? So first, you need a large number of homogeneous exposure units. You need a lot of people that are very similar. So you have good statistics. So if you're going to insure 27-year-old males, non-smokers, there need to be enough of them out there that their probability of dying. So life insurance works pretty well. They've got all kinds of statistics for that. You need to know when you have a claim. The loss needs to be definite and measurable. So that's why life insurance is a valued policy. That means that you set the value when you buy the policy. You tell them how much you need. Life insurance isn't like health insurance. It's not like when you die, the life insurance company sits down and says, well, let's see, where were you working? How many more years were you going to live? Let's figure out your home or human capital and we'll pay you that. They don't do that. That'd just be, now those things do go on. I actually got called to be an expert witness on a case where a guy died and they were suing whoever caused his death. And they wanted me to come in and give a value to the remainder of this guy's life. I told them, I'm not in that business. You need to find someone, you need to get an actuary who knows how to do that. So there are court cases where someone has died due to someone's negligence and someone needs to sit down and figure out the rest of their life value. But life insurance doesn't do that. We just put that on the policy. So life insurance is really easy. It's definite because you have a death certificate, and it's measurable because it's right there on the face of the policy. You know exactly when you are. Now, health insurance may not so as much. So it's definite because you went to the doctor, but is it measurable? It's a little bit more tricky to know, how much is covered, what's not covered, which doctors you go to, which specialists you go to, those kind of things. So it's not quite as obvious. The loss needs to be fortuitous, be accidental. Life insurance, that's usually the case. If you've ever read the Death of a Salesman, famous play, it's this man who's a salesman, and he's a terrible salesman. He's a failure as a salesman. So at the very end of the play, he takes his life thinking, I've been such a failure. At least my family would get my life insurance. But he takes his life during the suicide clause for his life insurance. So he doesn't even get the life insurance. It's a really depressing play. This guy is a failure even to the very, very end. But there is a clause that says if the person buying life insurance takes their own life within 2 years or 3 years of the policy, they don't pay the claim. After that, it is claimed. So life insurance does have a little bit of that you can't cause that. Now, the question might be, and you see this all, I love watching those crime TV shows, the real life ones. I find them really, the program Deadly Women. I watch that program. Maybe that's why I'm still single, watching programs like that. There's these women, they kill their husbands for the life insurance. Isn't that the first thing the detective asks? Did this person have life insurance in their life, and who's the beneficiary? Can someone kill the spouse and get the life insurance? Well, obviously they can't, but it's possible other people will get the life insurance. So that's not accidental, but the person that died, it was accidental from them from that standpoint. So, so it's interesting. Life insurance is when you have someone who's worth $500,000 dead, it creates some interesting criminal behavior. So suicide is the main thing they're talking about there, but there can be some other issues. I'm going to show you a really famous case, if I can find it. I had it. There's actually a video on this. It's called the True case. It's someone named True that sued USAA. USAA said it was a suicide, but the wife said no, it wasn't a suicide. It was an accidental death. I forget exactly how to do it, or a murder. I forget exactly how he did it. It was a really strange case. I'll have to show it to you. It's a very bizarre case. So there was a life insurance that's called double indemnity. I don't know if you've ever heard. I think there's a movie called Double Indemnity, but it's life insurance. So you buy $500,000, but if you die in an accident, your beneficiaries get $1 million. And I was talking to a good friend of mine, used to do claims for a life insurance company. I should ask him to come speak to our class because he's one of the funniest people I know. You kind of think someone who works for claims from a life insurance company wouldn't be a funny person. He was a funny person. He said the most bizarre cases they've ever seen was when someone has a double indemnity on their life. Because what does that mean? Someone's gonna murder someone to get the life insurance, but they want to make it look like an accident so that they can get the double indemnity. And what people do to get the double indemnity is incredible. Let me give you the most famous case. This lady, someone had laced Tylenol pills with cyanide or something. It was killing people. I don't know if you remember that case. So people were dying. Tylenol pills were killing people. And this lady saw that in the news. And so she laced her husband. She killed her husband with cyanide. And she was hoping when the paramedics came in, they would see that her husband died of cyanide and assume he died because he took one of those Tylenol tablets. But unfortunate for her, they didn't figure that out. So they said he died of natural causes. And so she's really upset about that. And so what she does is she puts a Tylenol tablet in, I'm messing up some of the case, but she laces some Tylenol tablets and puts them into a grocery store so that some people die. And after that happens, she then goes to the police and say, I just saw those people who died of the Tylenol, and I'm wondering if that could have been what killed my husband. And she gives them the Tylenol tablet. And that's how they figured out she murdered her husband. There was something wrong with the, so this lady, I forget, it wasn't much insurance. You can find this online. It's a bizarre case. But she killed 2 innocent people so that she could get the police to take her husband's body out of the ground and figure out if he died of cyanide. And she ended up going to jail just to get the double indemnity, not to get life insurance. She got the life insurance. She didn't get the double indemnity. So there's a lot of stories that you can get in life insurance on this accidental and fortuitous. It's a gruesome industry. And then the last one is the loss has to be reasonably handled by the capacity of the industry. So you can't have this catastrophic event that could wipe out the entire industry. That's why the homeowners insurance doesn't cover flood. It's why hurricanes is a big issue, like Ida. You have these huge losses. For life insurance, probably the biggest issue there is war risk. And so that's why a lot of life insurance companies don't cover war. But you can't have an event that takes out so many people at one time. You have these huge costs. Now, I don't know how health insurance companies are handling COVID and these hospital stays. It's probably noticeable in their claims, and it's probably costing some money. I don't know if it's the case where they're actually losing money. I should look at some health insurance companies and seeing if it's costing them. But we'll talk about that with health insurance, because if health insurance costs go up, what did they do? They usually just raise their premiums. A lot of it's just passed through type of costs. So they tend to make up for it by just raising their premiums anyway. So, all right, any questions on that? So if you're looking at insurance, that you need to have those 4 things in place, or the insurance industry will not cover those type of risks. All right, let's get a little bit of sense of the life insurance industry. Let's see if you want to work in this industry. So insurance is not always from the insurance industry. So the private part of insurance, that's our industry that we're talking about. It's provided by private firms. There are some government agencies that actually run their own insurance companies. I don't think that's true for life insurance, but it's true for workers' comp. This is a case where risk is transferred via contract. So that's really where we're focused in here. There are social type of insurance that's offered by the government, like when you have FDIC that insures your bank accounts, those type of things. There are public benefit guaranteed programs, these kind of quasi-insurance coverages that governments have. So we will talk, well, Social Security, Medicare, those type of things. We'll talk about them, but we're not going to study those. This class is not about Social Security and Medicare. It is true Social Security provides an annuity. Medicare provides health insurance and disability, or health insurance and I guess disability. Social Security provides disability insurance. We're not really going to get into those programs at all. So our focus is on the private world. In the private insurance world, it's broken up into life, accident, property, and liability and reinsurance. So the life insurance industry covers life insurance and accident and health. Although most life insurance companies don't do health insurance, and most health insurance companies don't do it. This industry used to do life and health combined, but it's really been separated off. So health insurance has become generally its own product. When I was at UTSA, its life insurance company did a little bit of health insurance, but not much. It was mainly Medicare supplement and Champion supplement. It was like this supplementary. So if you had Medicare, they would sell a little bit of health insurance. They cover whatever Medicare they can cover. So it was really small. So we generally have separated those two. We tend to, now we talk about life insurance, premature death and living too long. On accident, we tend to break up sickness versus injury. Those are 2 different things because the risks are different. On the property and casualty side, you got fire, transportation, auto, homeowners, liability, and liability is usually embedded in all the others. Workers' comp, some specialty coverages like boiler, title insurance, one of my least favorite insurance. I just bought my mom's house and I refused to buy it. I did not buy title insurance. I just didn't want to buy it. I don't like this industry at all. And Cameron, you need to go out there and lobby to make it legal for State Farm to sell title insurance. There's absolutely no reason why State Farm shouldn't be allowed to sell title insurance in USAA, these other companies. But anyway, so title insurance is a very strange animal. It's sold by title insurance companies at what I think are ridiculously high rates, but I'm probably stepping on some toes there, so sorry about that. But I just don't like that industry. And then reinsurance. Reinsurance is really unusual. On the P&C side, the reinsurance are their own companies. Things like Gen Re, Swiss Re, Munich Re, they do nothing but reinsurance. On the life insurance side, there are some specifically life reinsurance companies. General Electric owned one of these before, but mainly on the life insurance side, the companies themselves do it. They kind of share between themselves. So reinsurance is insurance that's sold to insurance companies. So on the property casualty side, Swiss Re sells insurance to State Farm and USAA and Farmers. But on the life insurance side, USAA sells reinsurance to MetLife, and MetLife sells reinsurance to Prudential. They kind of share among each other. So it's an interesting world. If I were your age right now, starting out my career, boy, I'd be really tempted to get a degree in actuarial science. And my goal in life would be to work for Swiss Re. That's one of the greatest companies I've ever seen. Boy, they came in and talked to USAA once, and I just sat there thinking, boy, I wish I could work for this company. Really exciting, fun. So Holly and Lindy, what other actuarial science majors we have? Boy, if I were you, I would say I want to work for Swiss Re one of these years. Great. They hire all kinds of people, not just actuaries. You know, they have obviously meteorologists, engineers, all kinds of people, because they're worried about hurricanes and earthquakes and those type of events. Very, very sharp people, very collegial type of work environment. Everybody's on the same page, working for the same thing. Great company. So that's the industry. If you work for an industry, what might you do? So I got an email today about production. There's a life insurance company here that is hiring UTSA students to do sales. I had a finance student ask me about that, and I said, I couldn't do that job. I'm not a salesperson. I'm not so sure life insurance sales is, unless you become a financial planner. If I were doing the sales side, I would want to be a CFP. That's where I would want to work through it. Just to do sales, just for life insurance, or I would want to move around and not to step on toes. I know we have some live sales here, but I'm hoping over their career they're going to become the jack of all trades. I just think that's the better way to go. And this is an area where I think financial planners add tremendous value. I don't like financial planners and what they do on the investment side, because I don't think they add much value on the investment side, mainly because it's just they add a lot of costs and not much value. But I think CFP financial planners add tremendous value on the insurance side. So if you work for an insurer on the sales side, I would say become a jack of all trades, learn everything. And then you can open up your own business. You can do your own financial planning business. You could do the underwriting side. Underwriting side is a great way to start your career if you want to be in the insurance business. If you're an actuary and you can't get enough exams to get an actuarial job, it sounds like the actuaries in our class are having no trouble getting insurance actuary jobs. But if you are struggling with that, then apply for an underwriting job. It's a very well-paid job, and it teaches you a lot of actuarial stuff. It's a great way to learn actuarial business. Or let's say you're a finance major and you really want to work in an insurance company. You want to work like in a USAA or State Farm, great companies, but you can't get a job on the finance side. Start on the underwriting side. Learn the business. It's a good way to learn the business from the inside out. And then as you see jobs come up on the finance side, move over to the finance side. So underwriting is one of the most perfect ways to learn an insurance company. So what does underwriting do? They figure out whom they want to insure and whom they don't want to insure. Who are the good risks and who are the bad risks. Now, we have the head of life underwriting is a former student from this class, a guy named Rick. Interesting character. He was a heart surgeon, and he had a special needs daughter. And so he wanted to get out of that profession. And so he got a degree in finance. And when he told me his background, I told him, man, you should go into underwriting. You would be perfect for underwriting. So he applied for a job at underwriting at USAA, and one of the questions they asked him if he had any background with an EKG machine. And his answer was, yeah, actually I have a patent for one of them. And on his resume, he apologized that he didn't list all of his patents because some of them were somewhat sensitive. So I said, Rick, your resume does not look like any other undergraduate student's resume I've ever seen. He went in, he actually intimidated the head underwriter for USAA as another doctor, and Rick had such a great background. But eventually Rick got to the head of that department. He has spoken to this class before. The last time I asked him, he said no, he was just too busy. I might try him again this time. He can really tell you how underwriting works, what they do. I mean, just imagine having a heart surgeon as your underwriter, and someone comes in and he can just look at their health records and he'll know very well if this person's insurable or not. So that's what you do. You really understand the whole process. He did a great presentation when he spoke to the class. The only problem we had, it was so interesting that we didn't finish his presentation. We had to cut it short, and this was like 15, and students were still asking him questions, really interesting stuff. So I'll see if I can get him to speak. I don't know if I can get him this semester or not. So they're trying to protect the company from adverse selection. People who know they're sick come in and buy insurance because they know they're going to have a claim. And he's the one who's going to handle those really difficult cases to say, can we really insure this person? This person had lung cancer, but they're now in remission. Can we sell them life insurance? This person has a history of heart disease in their family. They're overweight. They used to smoke. They're not smoking now. That's the kind of thing they're going to do. They're going to put together the questions for the application. They're going to work with the agents and the brokers to collect information. They're going to do the investigations. When I was at USAA, it was right at the start of the AIDS crisis. And life insurance companies, that was an issue for them, because at that time, people with AIDS, it was really a terminal disease at that time. Now people are living with it for a very long time. And so USAA started doing blood tests of everybody. It was very expensive for them to do that. And what they discovered was it really didn't help them that much in reducing claims related to AIDS. But what they did discover is they were discovering a lot of other diseases, people who had a problem with alcohol and other things. So they discovered that the blood tests that they thought were too expensive were actually quite valuable for them. And so they started using them more frequently, going get medical exams, those type of things. So that's what an underwriter would do. When do we need a medical exam or not? So USAA, while I was there, the CEO was telling a life insurance company, why can't you sell life insurance on the internet? And the insurance company, the actuaries are saying, and underwriters, because of adverse selection. We're going to have really sick people buying our products on the internet. How do we control? And so they're finding a way, how can we sell life insurance via the internet when we need blood tests and we need medical exams and those type of things? So it's a little different for life insurance. Underwriting on the property and casualty side is very different, but just as valuable to you. So don't forget about that whole career. It is a very well paid. You might get into it and make it your whole life's career. You might love it so much. It does not pay as much as finance. It does not pay as much as actuarial science, but it's a perfectly reasonable, respectable career, especially if you move up into management. You'd make just as much in management that way. Okay, the claim side, loss adjustment. That's not a bad way to learn the business. They investigate the loss, make sure they're going to pay it out. Are they going to contest the claim? So someone notifies that a death has occurred or a loss has occurred. They're going to do some investigation, ask for proof of loss. Obviously, this is a much bigger issue on the health insurance side and on the property and casualty side than on life insurance side. Life insurance side is less. But there is some investigation here because of suicide or the chance of foul play or anything unusual. They'll actually look into that. If the claim is denied, the policyholder does have a regulatory body they can go to or go to court, they can complain about that. So loss adjustment, if you're an actuary, we had one ladies in this class. She wasn't an actuary, but she's a data scientist. She started in claims, and she said that was a great help to her career. She spent a year or two in claims. You'll learn a lot about insurance by working in claims, no doubt about it whatsoever. So it could be a career. Most people on the property casualty side that work in claims find it to be an extremely stressful and very difficult process. So I told you about the lady who worked in claims on disability side, and just she just seemed incredibly stressed out every single day. I don't know how long she lasted in that job. It was a tough job. Then actuaries, we have some actuarial science majors in our class. I only know of 2 of them, so if we have some others, I think we have a few others besides Lindy and Holly. So if you're in actuarial science, one thing I'll tell the actuarial science majors, we have money. The Insurance Council of Texas donates money to UTSA every year, and we cannot figure out where to spend it. It has to be spent on insurance-related things, and we can't think of anything. So what we've done in the past is we've gone to the actuaries, and we've asked them, if you're taking your exams, are there study materials we can buy you to help you study for your exams? Okay, Jade, I remember you are an actuarial major, yeah. Brennan, okay, wow, we got, oh, that's right, Anya, I knew you were one too from last semester. Wow, we got a bunch, wow, it's like over half the class. Who in this group is running the actuarial club? Is anyone here connected with the actuarial club? Do we know who the president is this semester? Mufaro, of course, I should have guessed.
The stats club, but we do have a lot of actuarial science majors.
Thing, right?
Yeah.
All right, so Mufaro, we've got money, we don't know what to do with it. And it's embarrassing because every year they send us a paper to fill out to ask us where we spent the money. And every year we say, we're working on it. So, and it's up to thousands of dollars now. So,
wow, we can work something out.
If there's an actuarial conference you really want to go to, so the Casualty Actuary Society, find ways, and we can send a few of you to a conference. We did use the money once to send 2 students to a conference, but it was here in San Antonio, so it didn't cost all that much. So yeah, we need to spend this money.
Sounds good.
But actuarial, obviously, actuarial, these are the quantitative people. They're taking a lot of math classes. It's essentially decision science, but on steroids, just focus on insurance. So if you take my class in the spring, the Insurance Council of Texas also provides a scholarship for actuarial majors, and they usually win the scholarship. I think we have a couple of scholarship winners in this class that won it last year. So, so in the spring, let me know. I'll try to remember to get y'all in there. If you're an actuarial major, you have a good chance of winning the scholarship because the main thing they look at is the probability you're going to work in the insurance industry. And obviously actuaries, that's where they want to be. So actuaries can work in all places. Obviously in the P&C and life side, they have our actuaries. Benefits actuary, I think that's probably a dangerous place to work because if the tax code changes, it can really shrink that industry. The government hires actuaries. We've had a few actuary majors actually work for the government. So Social Security, Medicare, those type of places hire actuaries. Corporations hire actuaries. So I had a good friend at USAA. I just speaking to him a few weeks ago. He's a pension actuary working for USAA. I actually called him up. I'm trying to decide whether to lump sum my pension plan out. And he and I worked a lot together. So he set up a Zoom and I spoke to him. Plus I helped get him the job at USAA because he used to work with my brother. So yeah, he's a great job. He's an actuary at USAA. USAA had another actuary, a good friend of mine. He worked on the executive programs. That can be a job. If you're going to do executive programs as an actuary, you're going to know the US tax code extremely well. So there's a lot of places actuaries can work, but obviously in the industry. So do you want to work on the P&C side or on the life insurance side? And there's more jobs on the P&C side. but yeah, fewer opportunities for career changes. And the main reason is the life insurance actuaries have a lot more interaction on the investment side. So that's why the guy who took my job at USAA over equities was a life actuary. I don't know many P&C actuaries that become portfolio managers on the life side. So you get a lot more investment experience. I do know P&C actuaries have no trouble moving between actuarial science and data science. It's a fairly easy career move. There's a lot of USA actuaries working as data scientists now at USAA. Pretty straightforward. So what's the big downside of actuary? It's those terrible exams, right? You're going to be spending the next 5-10 years of your life taking exams. But if you can handle that, you've got a career that is high paying, low stress, intellectually stimulating, pretty well assured employment. So I thought about it. I had a moment of thinking about, should I go back and get a master's so I can become an actuary? But I didn't do that. But it was tempting. So you actuary majors, it's a very good career path to take. For you finance majors, it's not too late. In about 2 or 3 years, it's going to be too late. So there's probably some people older in life becoming actuaries, and it's probably possible. I had one a couple of semesters ago that it was a career change, a second career in actuary. She's going to do great. She was just an exceptional student. I was a strong reference for her. I can let me get you a job, because she was an excellent student. So it is possible, but generally because of the exams, you need to decide that pretty early in life so you can get the exams out of the way before you hit 30 years old if possible. Actuaries, y'all want to add anything? So Lindy and Holly and some of the others had some interns.
I would just say that with your qualifications, if you just took a couple exams, they would totally hire you. But
yeah, you got to get, that is one of the things. I think USAA requires a couple exams before they'll hire you full time. But you can, get a job in claims or underwriting while you're waiting to do that, or get a job in decision science while you're waiting to do that. So here's a website. It looks like the website is Being Actuary, but it's not Being Actuary. It's Be and Actuary. Beandactuary.org. Are y'all aware of this website? Mufaro, you've seen it. So a great resource, gives you all kinds of career types of insights. What schools to go to, those kind of things can be interesting as well. UTSA has, I've been really impressed. I don't know that much about your program. All I know is the actual students in my classes are really smart people, really good students. So we're getting some good students going into this program. I don't know what kind of help we're giving you on the exams and those type of things. We're not Georgia Tech. Georgia Tech's kind of the premier school out there. So I don't know how your professors are and your classes are. I'm hoping they're really good. I just know we've got really good students. So we're at least picking up students. And this is, a good group of actuaries in this class. So something's working. All right, so you want to change majors, do it tonight because you're running out of time. And then there's the investment side. Now, obviously, insurance companies have the general, CFO, accountants, finance people. We have a lot of UTSA students that are just general finance majors working at USA on the corporate side. So every company has those. So I'm looking at those functions that are specific to insurance companies that everyone doesn't have. So insurance companies have a huge investment process. And I think it's more interesting than the investment process at other places like BlackRock or Fidelity. I love the investment process at insurance companies because it's this close-knit working relationship between investments and the actuaries. I love that. I got to work with actuaries all the time. It was my favorite part of my job. I wasn't smart enough to be an actuary, but I knew how to get stuff done at USAA. And so I had this wonderful this incredible relationship with the actuaries. Couldn't get stuff done because we had some actuaries that were a little bit nerdy. Lindy and Holly don't tell the USAA people that, but they had some really, really nerdy actuaries. So they just weren't good at presenting stuff, but I could get stuff done for them and we would work together and I would share the glory with them. I love that. Those were really, really fun jobs. And so if you work on the investment side of an insurance company, it's a radically different job than any other investment job. I interviewed with a firm in Chicago, in a life insurance company. Now interviewed on the investment side, and I went through a whole series of interviews throughout the day, and none of them have ever met an actuary. And when I got to the last interview, it was the CEO of the company, and I walk into his office and says, "Oh, I remember you. I knew we were never going to hire you." So that's the first thing he said to me. So I wasted my entire day. And so I just let him have it. I said, "That's fine. You're not going to hire me, but I'm just going to tell you, your investment people don't know what they're doing because they don't know a life actuary. How can you be the investment arm of a life insurance company and you don't talk to the life actuaries?" So he was for sure not going to hire me then, but it was like he really wasted my whole day. So I was pretty upset. But that was amazing. How can you have an investment arm that doesn't know what the actuaries are doing? It's so tight. So at USAA, the actuaries in the investment world, they were closely knit. Now USAA has now spun off the investment arm. They hired BlackRock. And I was talking to the guy who used to run their portfolio for life insurance companies, and he says he thought it was a disaster. He thought it was a horrible thing for them to do. We'll see how it goes. Now, Holly, this is my prediction, is that in a few years, that's going to be back in-house again. They're going to bring it back, but we'll see. But they outsource it to BlackRock, and they're spending 3 times more to have BlackRock do it than they're doing it themselves. And I thought it was better when they did it themselves because then they could really control the process really well. But we'll see. I understand why they did it. Part of it's that they're running out of space. They just got to get employees out of the building because they have too many employees and not enough building. I don't think that's a good reason to outsource a function. So we'll see. It'll be interesting to see if that prediction comes true or not. All right. So those are the kind of things you can do in an insurance company. Pretty cool place to work. The industry itself has some unique features. First, the legal forms. There's mutual funds, mutual insurance companies, there are reciprocals, there's stock companies, and there's government agencies. So a mutual insurance company is owned by its policyholders. So State Farm is a mutual. Northwestern Mutual is a mutual. Now, what do you think Mutual of New York is? Any guesses on that one? Say mutual, or Mutual of New York is not a mutual. So guess what Mutual of New York goes by today? They go by money, M-O-N-Y. What does M stand for? I don't know. But it used to stand for mutual, but they went public. Prudential used to be a mutual. It's now a stock company. So mutuals can demutualize. They can go from a mutual insurance company and become a stock company. So Mutual of New York, Prudential. Would State Farm ever become a stock company? Would Northwestern Mutual become one? Probably not. I doubt it. I don't know if Cameron's on the call tonight, but I doubt State Farm would ever become a stock company. Now, I would have said that about USAA 10 years ago. Today, I'm not so sure. After they sold off their investment arm, sold off Victory Capital, I wouldn't hold, wow, Buffett tried to buy State Farm. I wouldn't think. State Farm is a pretty tight-knit culture of a company, a lot like USAA in that way. It's just, it's homegrown and they're proud of it. And USAA is somewhat like that. But with USAA selling off some of these brands, I think if they're going to sell off anything next, it's going to be the bank. The USAA Bank is a huge issue for USAA because it's growing so fast. So if they're going to, I'm not giving any inside scoop or not. I don't know that for sure. I do know the CEO of USAA, but he would never tell me that inside information. Oh, State Farm had a bank? Yeah, I knew they were trying. So you can demutualize You have to go through the regulators to do that. You got to make sure you set the stock price. So when Mutual of New York demutualized, my parents actually had life insurance on my life from Mutual of New York. So I actually got in the mail some shares of stock in Mutual of New York. I still had the life insurance, but I was also now a stockholder in Mutual of New York. And they just had to work out with the regulators how many shares each policyholder got. A reciprocal is primarily property and casualty. So the main reciprocals are USAA and Farmers. They're owned by their policyholders as well, but it's a little bit different in that essentially you're giving additional powers to the CEO. You're kind of making the CEO give them somewhat a power of attorney to represent the policyholder. So it's a little bit strange. I don't understand Farmers' structure because Farmers is owned by Zurich or somebody, I forget whom. So I don't know exactly. Farmers' structure is really, really bizarre. USAA is owned by its policyholders, but it's a reciprocal. It's not a mutual. It gives them some really, really interesting tax advantages that mutuals don't have. So it's a pretty interesting company. It's not radically different than State Farm or Northwestern Mutual, but it is a different structure. And then you have stock companies. They're regular, just like, stock companies. Now, State Farm is a mutual, and State Farm owns a life insurance company. State Farm's life insurance company is a stock company, but there's only one stockholder, and that's State Farm Property and Casualty Company or some other holding company. But so State Farm is a mutual. It owns a stock company that's a life insurance company, but that stock company is wholly owned by State Farm. Same thing with USAA. USAA is a reciprocal. It owns a life insurance company that is a stock company, but USAA is the only owner of that life insurance company. I doubt USAA would sell off its life insurance company. So I think the order would be, it's already selling the investments, then the bank. It's doing some weird stuff with its real estate company. And if it keeps selling stuff off, I think at the end, it's going to be a property and casualty and a life company. Maybe the property and casualty goes public or not, I don't know. Or maybe they sell themselves to a public company. It would be strange. Reciprocals are so bizarre. They're not as easy to demutualize as a mutual company is because of the reciprocal ownership of the membership. So it's a little bit different. So we've got some of y'all will be working for USAA, so you can keep me posted on that. It'd be really interesting to see. A lot of the government side is stuff we won't talk about at all, so we'll just skip over that. They have different pricing structures. We're going to talk about participating versus non-participating a little bit later. So we'll see what that means. It's fairly unique to the life insurance side to have participating policies. It really has to do with that cushion I was talking about. Insurance companies charge a little extra because just in case something really horrible happens, but they don't expect it to. And so if you have a participating policy, they'll charge even more. They'll really overcharge you. So instead of charging $110, maybe they should charge you $100. They would normally charge you $110, but if it's participating, maybe they charge you $115. But then over time, they'll send you some of that money back as a dividend. So that's what participating in. And then the last one, which is really, really critical, is the distribution systems. Do they have agents that sell for them that are in that work as employees of the company, like a State Farm has their own agents that are employees of the company, or Allstate? Or do they use independent agents, agents that work for themselves but can sell insurance for different companies, or brokers that represent themselves? They're not actually agents of the companies. So they may have exclusive agents. They may be direct writers like a USAA or a Geico, where they do everything through a salary sales force, or they may do everything online or direct mail. USAA at one time was the largest or one of the largest direct writers in the world, doing everything by mail. But USAA does a lot on the internet now. Now, since I bought my mom's house, I had to buy homeowners insurance for my mom's house. I did that by phone because I want to understand it. But I did it by phone, and she set the whole thing up for me. But then I executed the policy online. I just had to go on and just click on it and say, so it was a very streamlined process. I probably could have done it online, but I'm glad I did it through the sales rep. It made it a little bit easier. So this industry is changing. It's changing much more on the property and casualty side than it is on the life insurance side. People still tend to buy life insurance from either direct writers, salaried sales forces, or through commission agents. So it'll be interesting to see, I wish I could find the statistics, how much life insurance is being purchased online, entirely automated online. A lot more auto insurance and homeowners is being bought online. So it'd be interesting to see if there's even any statistics on that. All right, so before you interview with an insurance company, you need to know these things. Is it a mutual? Is it a reciprocal? What kind of distribution system does it have? Does it have agents? Is it a direct writer? So kind of get that distinction of the company. And we'll talk some other stuff you should know about the company as we get into different type of products. So you really want to know what types of products do they sell, especially on the life side. Do they do variable products? Do they do health insurance? Do they do disability? So you need to know those different types of products. There's some really good websites out there that I recommend you go look at, especially if you're an actuary, you're going to interview in this industry. These are great websites to go to. So the NAIC is a regulatory body for insurance companies. They really have cleaned up their website. Their website looks like they're a company, right? These are regulators. So you can go on their site, and there's all kinds of stuff you can get from them. I had a boss that I think half of his job was for the NAIC. He was essentially a lobbyist. And anytime they needed to do research, my boss would say, I got this guy named Ron, he'll do it for you. And he'd come back and I go, you told him what? And said, yeah, I told him you would do this research for them. I said, wow, that's like 40 hours of work. Thanks a lot, boss. He told him once that I would go through the investment laws of all 50 states and summarize them for the regulators. And I said, that's like 5,000 pages of legal wording. I said, you got to be creative. But he always volunteering me to do stuff. But that was his job, to try to influence regulators. So insurance industry is heavily, heavily regulated. And so this is a good website. Why would you go to this website? Well, if you go on this website, you see what are the issues that they're dealing with. There's probably a site here about COVID. There's probably a site here about the gig economy, about Uber drivers getting auto insurance. There's probably a site here about reinsurance and what they're doing, about hurricanes, about Ida. There's all kinds of stuff here, so you can see what's going on. AM Best is a great place to work. They probably hire actuaries. I think AM Best reminds me, I've been on their campus once. I was doing a presentation about how USAA invests. It reminded me a lot of USAA. It has this very campus kind of college kind of atmosphere to it. It's really beautiful campus site with a beautiful building. So, if you're looking for a place to interview for the job, AM Best would look great on your resume. They hire finance people, they hire actuaries. So it's a great site, but they also have a lot of articles. They have a magazine that they publish. So it's a great place to go. See, there's a lot of stuff on Ida right there, the wildfires in California. So if you're looking for just things, industry type of things, specifically related to the life insurance industry, is the ACLI, the American Council of Life Insurance. So they got a lot of free stuff on their site. It's somewhat of a trade group. They have a conference. So, so Mufaro, this is what I'm talking about. Go to these sites, the Casualty Actuary Society, ACLI, go look for the conference. If their conference is in like Austin or Houston or Dallas, I might be able to talk to Dr. Baynott of sending 3 or 4 of y'all up there to represent UTSA. So, let us know. I don't know if I can get you on a plane, but I could probably get you on a road trip, maybe.
Sounds
then
good.
You have the Society of Actuaries, same thing. They have conferences and those kind of things. And the wonderful thing about these conferences as an actuarial major is that you can network and meet other people. So the ICT conferences, we have paid to send students to that. They haven't had it live the last couple because of COVID, so we haven't had anything to send people to. They actually have a networking, so they introduce Actuarial students and other UTSA students to companies that are hiring. They have like this quick interview, kind of speed dating type of interview process. So conferences are great places to go. You can go with your resume, introduce yourself to people, get names, sit next to people, get into conversations. They're great things to do. But I don't know where their conferences are, but San Antonio is a great place for a conference. And I've had pretty good luck. I try to watch for these conferences, and usually the fees are like $800, $900. But I can sometimes call them and say, hey, I got these starving actuarial college students. Can you give me a break, like $100? And I've had some of them say, hey, send 3 of them for free. We'll let them come in for free. So it never hurts to ask, right? But even if it is for $300, $400, Dr. Baynop may still be willing to pay for it if it's not too many students. All right. So, all right. So that's a good overview of the industry. Good resources to go to and just see what's going on with this industry. All right, so where are we going next? Here's where I'm really going to step on toes. So sorry, Cameron, and anybody else in this industry. So Cameron, make sure you don't have your class notes out. So I'm going to give you a pretty extreme view of this. All right, so I might exaggerate a little bit just to try to rile you up because I know it's late at night. I'm going to give you my perspective, and you're going to have to do this on the exam. If you disagree with me, then you have to give my perspective, and then you can argue against it all you want to. But I want to argue why I think this industry has some serious ethical issues. And then if you want to debate it, all you want to. Cameron, if you go to work and you have someone at work that says that guy's an idiot, and he or she wants to come and talk to our class and give their side of the argument, I'm perfectly happy with that. All right. Professors, we don't know what we're talking about 90% of the time, but we sure think we're smarter than everybody else in the world. So this is my experience. I think this is true. I really do think this is true. I don't think I'm giving you, I think I'm giving you a very accurate picture of this industry. And I've had a lot of experience, not just working in an industry, but I give a lot of pro bono work where I'm helping a lot of people who have had a problem with this industry and help them get out of their mess. I've done that several times. So we'll see how it goes. So be ready to get your toes stepped on this next class. I'll let you out early so that you can kind of prepare yourself. What you need to do this weekend is articles 3 and 4 of paper 1. All right, get that out of the way, and so sorry, Cameron, Tuesday we'll probably talk about articles 3 and 4, and then next Thursday I'm going to talk to ethics of life insurance. All right. So, all right, I'll stay on if you have any questions, but we'll stop there a little bit early.